In this video, after a lengthy absence from YouTube, I'm back to break down the week that was. I recap 8 different trades I took this week. I'll go through each one in detail, outlining the specific reasons for my bias and my exact step-by-step process. I'll assess what I did well and where my execution fell short. A lot of work goes into these presentations, so please hit that like button and subscribe as it really helps the channel. And now, time for the video. Today is Saturday, September 23rd, 2023, and I am back for a trade recap. It has been a while since I've posted on YouTube. Just been a lot of work to try to get these videos out, but just been tied up so much that it's kind of fallen to the wayside. But I really do want to keep documenting my trades, and so I'm going to do my best to kind of record at least weekly if I can. If I can't do daily, or maybe I'll just wait for a batch of trades that I've taken and then do a video kind of going over them, just because I think it's just really helpful for me. And I learn and others can learn just by going through the recaps. With that said, let's get into it. This week was a very active week for me. There was a lot of great price action, and I took a lot more trades than I typically would, including in Forex. I only took 2 losses. So let's break it down. Let's start talking on the let's go to the ES charts. Let's go back to last Friday. I'm going to go over this review. This was a great trade, and it really does set the tone for the following week in terms of what I was expecting. So going back to Friday, which is this big down move, I caught a nice short, which I'll break down right now. So clearly we've been kind of correcting up this down move. Even though we showed a little bit of bullishness here, we come down, fill this imbalance, push up again, consolidate, and then clear these highs and also these highs over here to the left, tapping into this imbalance and then getting a nice rejection. Obviously, the candle had not closed here during the time of the trade, but what I want to draw attention to is the fact that we had this volume imbalance on the daily chart. And after rating these highs, and we saw quite an impulsive move back down through this level, let's take us down and just watch how price interacts with this volume imbalance on the hourly chart. So I think there was some news, I can't even recall what it was, but price is dumping pretty aggressively, and we get a very solid close through the imbalance. So it offered no support where you would expect it to offer support if the market was indeed bullish. So that to me was the clue to look for shorts if we could get some sort of a pullback to this area. It's just a very simple pullback. And I actually just ended up just straight up shorting with the stop kind of above the imbalance and above the opening price of this 15-minute candle. And then target was right before this low right here. And we got a nice entry and about a 20-point move there to the target. So that was a beautiful trade on Friday. And again, like the main point I want to get across when talking about that setup, is really just heading into the beginning of the week. Let's go to the weekly chart. When it comes to anticipating what type of week we're going to have. So this is showing this current week, but on Monday, I believe. Clearly, we've rejected this imbalance on the weekly time frame, taking liquidity that existed above these highs and closing back within the range. And so seeing that was clear and obvious indication that price is likely to seek more downside targets. And we have this imbalance right here, which was, I think, the first area that I was interested in seeing hit, but then continuing lower potentially to these support levels further down. And if we go into the week, this is Monday just kind of consolidated a bit. I don't mind passing on Monday. if I have a view on the week, because I do expect the move on Monday to probably be a counter trend move or just kind of chop around, which this is kind of what happened here. We did see a push lower. This is a false start for the week. Initial move lower in the direction that price ultimately goes to, but then pulls back, takes out this high. Actually, I do recall on Monday having a limit order here before this move down. If we had gotten a pullback here, I would have been very interested in shorting here, but because it had aggressively hit the low and reversed, I just wanted to see some confirmation signal here. And I think I was just occupied at the time. I didn't get into any trade here, but this spiked down, and then clearly the way to read this for me was a swing high gets rated, we're bearish, and then heading into Tuesday, we are now into Asia session on Tuesday. Tuesday's trading, when this started to reject off of this high, I entered short, or I might have entered actually, no, that's about where I entered. Just looking at my screenshots here. That's where I entered. Now the problem on this trade was that my stop was too tight. My stop was just kind of above this body. I thought with this aggressive move back down, closing in this imbalance, I thought that it was less likely that we would go to this level. I thought we would probably reject around this halfway point, which I saw it doing. And so I got a little, I guess, greedy with my stop placement. I kind of managed it differently on two different accounts. On one account, as this started to move, I didn't touch the trade at all. I left the stop where it was. And then on another one, kind of reduced my risk by a good amount, thankfully, because what ended up happening was I got stopped out. My original stop also got taken out. So this was a loss due to poor stop placement, because then to see the market do this also it was before, very rare for me to take a trade in Asia, London, because most of the time I want to get involved in New York session. I think in hindsight, the lesson would be, if I am going to take a trade like this, use a higher time frame, like the hourly, which is fine, but be more generous with the stop, use lower leverage, and just trust the invalidation level, and just know that we are likely to see more chop, take people out of the market closer to New York session. So kind of greed got me there, and we saw this huge sell-off. And it's hard when you're seeing this move happen, you're not in it, you got taken out. It's not a great feeling when that happens, but all good. I'm proud of the response, which was a trade at the end of the day. We have a swing low formed after this down move. We hit this imbalance. So again, we get this swing low plus this impulsive candle up, and we have imbalances to fill. So the thought is that price is, if I see a confirmation signal on the lower time frame, that we could be seeing a bit of a retracement, even though we are overall bearish and expecting lower prices down the line. And so after watching this on the hourly, I jumped down to the 5-minute chart, and we can see we have this price action, this impulsive move up. Yes, we did hit this high, so I wanted to be very confident that this was going to support us for a higher move. I do feel like when you see these big wicks in this type of situation, like the first test of an area, it's kind of a trap, I've found. And I know this because I've used to short this. After this kind of a move, I would short, and it's almost too easy to work. Maybe, I'm sure it does work sometimes, but this move down, everyone wants to get short, and this is like the first opportunity to really get short. And if your stop is above this high, this momentum back up is likely to, it's not uncommon to see some sort of a consolidation and then another high, which is what ended up happening, or even just a brief pause and then another high. So that's what I was hoping would happen on this trade. You can see that also on the 15-minute, we have all these bearish imbalances are being inverted, and we're creating bullish imbalances on the way up. And like I said, I wasn't going to buy this on a limit because we are coming off of this area, but I want to see a liquidity grab here and a raid. And so all I did was jump to the 2-minute chart, see a nice displacement down into the level. And if we're bearish, it should just keep going. And so then if that were to happen, there's no buy trade. In fact, then I might look for a short in that situation. But here we kind of consolidate around, we accumulate orders in this area. Sellers, again, who saw this long wick in a bearish environment are selling with the stop above. They see this break of the low and then kind of another lower low here, if you're looking at it very literally. And that might be a short signal to kind of induce more shorts into the market. Instead, what happens is the market pushes up with a bit of an impulse and clearly breaking this bearish level with total ease, I would say, creating a new bullish imbalance on the way up. And so this is when I placed my limit order. And again, this is nearing towards the end of the day. So I was just generally looking first for the high. This was more of a time-based trade. By this time, I really don't. Sometimes I might hold a trade past 1 p.m. I believe it was 1 p.m. West Coast time. But, we're not in a bullish market. If we're in a bullish market, I'm very confident we're moving higher. I might leave it open past 1 o'clock. But we got to about 12:50. We started getting to I saw this move, and yeah, we were at 12:45. 2R got back the loss from earlier. And so that was more than enough for me to just kind of close out the day on a positive. And that was it. And you can see the rest of the day just went sideways. So even if I did hold, sometimes I've seen things that, like I said, after 1 o'clock where it does spike up higher. And sometimes if it does spike up higher, it might still first have a big wick down again into it could have easily done that. I've seen that happen to me before too, where you're kind of in a trade like this, you're trying to managing your stop, and then you get a nasty wick at this time down here again, and then it pushes back up towards the high. So I just wasn't interested in seeing what was going to happen. So I took my 2R or whatever it was and closed it for the day. So that was Tuesday, which was a pretty active day. The good thing about this was managing the emotional aspect of being short, incorrectly putting my stop where I put it, seeing it run that stop, and then tank, and fortunately not chasing, just kind of relaxing a bit and just watching for, out of the corner of my eye for a possible opportunity, giving myself one more shot to get involved. Actually, I was totally content not trading the rest of the day because, again, just after seeing this, when you're not in it and you think you should be in it, you don't want to chase. You don't want to make a mistake early in the week, throwing money away. So I just noticed also this was a 1 hour gap too. So clearly we had a lot of confluence to have a short-term bounce here off of this area. And I think, price obviously did come up to this high in the next next day. But that was without me in the trade. So let's go on to the next trade that I took. I'm just going to try to go chronologically. So Wednesday, actually, I took a trade on the Aussie yen. And the reason why I took this on Wednesday was because we had FOMC later that day. And so this was taken Wednesday at the end of Asia session into London. And I just assumed that the dollar would be range bound more or less, even though it did move a lot on this day. But because of the upcoming news on FOMC, I just wanted to trade a cross pair. And so what was the trade? The trade, which I will lay out all the reasons for, was basically we're in this bullish trend, nice impulsive move. We have a pullback here, and I'll show you where I got involved for a higher move. But I want to first talk about the bias for the week and why I was looking for longs to begin with. It started on the weekly chart, and just quite simply, we just had this big bull. I'm only looking at this leg of price. because that's all that's really relevant for me in for this type of trade. So nice strong impulse, and then we see a correction down halfway back into the range, into this imbalance area. We can see price then form this low, consolidate, form higher low here, and then start to push up. And then so this was heading into the week. So this is the weekly candle that just transpired. So but before the trade, just looking at the weekly time frame, seeing that we impulsive move up, correction back down, halfway retracement into this imbalance, rounding out, accumulating, starting to push back up, higher swing lows. So the first target on this time frame for me would be this weekly high. And of course it can continue going to this high and maybe all the way up to this high. We don't know. So that was step one for just being long biased. Step two, let's go back to the day of the trade, which was Wednesday. Let's undo this and let's look at before Wednesday played out. Let's just talk about the weekly profile. This is something I like to use for a bias to form a picture of the bias. So we know that if we are going to have a bullish week, it's not uncommon to see a down day on Monday or Tuesday, making the low of the week. And in this case, it occurred on Monday. We have this, after this push up from the week prior, again, it looks like it might be rejecting these highs. Monday forms a down day, but then Tuesday breaks out above Monday's high. We get a nice close above Monday's high. And so to me, this is another sign of confirmation that we are likely to press higher. Furthermore, what do we have here? We have a swing low, a higher swing low. This candle from Monday is lower than Friday's candle, and it's lower than Tuesday's candle. And so that is another sign that when we are in a bullish environment and we're making a run and we have a good thesis behind why it would go to this high, it's another signal based on the daily chart that we can expect a bullish day on Wednesday or Thursday. But by Wednesday, seeing this with the other factors mentioned, I felt very comfortable looking for longs. So what am I looking for from this point? Well, I'm just looking for some type of pullback that I can trade at a time that makes sense to get involved in the market. What do I mean by that? Well, this is an Asian pair. While that does matter, if I'm on the higher time frame, it doesn't matter as much the time of day for me. But the big thing is I want to see some sort of a pullback, ideally. If we just sort of draw just a general fib, 50% comes around here. So close to there is ideal. So right before midnight, we can see that we run these lows on the hourly time frame. We're at about 50%. So now I'm just looking for evidence that the bulls are stepping in, let's say. And so we can see that we have this bearish move, this bearish imbalance that took out this liquidity here. And if we were to remain bearish, we would expect this bearish order block, this bearish imbalance to reject price, but we're not bearish. We're bullish and we're just looking for the time to get involved. And this is it. We have a structure break. We invalidate this bearish imbalance, closing through it after a brief pause there. And now we form a new imbalance right here. And so all I'm trying to do is set my limit order. I think it was at 40 or 42. I don't have my numbers in front of me. And it was like a 12 pip stop, so it's about right. And our target, and now again, I'm probably too conservative, but this was our higher time frame target, which felt like reasonable to go for, and this would have been a nicer reward. But I was really just looking at about 2R because I was going to bed, so it was just more of like leaving this once I entered. I can't manage it if I'm up here, if I'm aiming up here, and then price does something crazy here and then comes down here, who knows that I'm in it. And now I'm having a winning trade become a losing trade or a break-even trade. And just because this is our higher time frame target doesn't mean it's got to hit it. It doesn't mean it has to hit it on this day. And so it could just come up here and then chop around and then go later. So 2R is all I really went for. And that was fine. It hit it and then it did go up much higher. Another thing that I considered doing was to just use these extensions. So this fib from low to high, and seeing this was the discount buy off the 50% below midnight, or right around midnight. So basically, yes, I did not buy below the midnight opening price because it didn't give me an opportunity to, but it did form a new swing low on the hourly chart. See how it formed this swing low right here? And it ran the internal liquidity right here and pushed up and created an imbalance on the 15-minute chart. So for me, that was enough of a reason to get in. It sort of has the harmony on all time frames, but again, could have taken this fib extension for about 4 hours. Now let's go into Wednesday. Let's go into Wednesday, which was a very nice down move. So going into the day, we're still bearish on indices for the same reasons we've been bearish at the start of the week. Rejecting highs, breaking through lows, coming off of a premium level. And look, each day since Thursday of the previous week, we're making lower lows relative to the prior day's candle. So heading into Wednesday, this is basically the first target to have in mind at a minimum. We were just expecting it to go lower. Now, that doesn't mean it can't try to go higher, take a high, but we still would be looking for it to reject higher. So if we're looking for it to reject and to turn lower, we want to look for targets on the hourly or areas of interest on the hourly and 4 hour to potentially take a short. Now, what's interesting about this trade that I want to kind of record is we have this liquidity grab on the hourly. And then if I drop down, we can see that we've created this displacement on the 15-minute chart. And so in normal, ordinary circumstances, this would be the entry for me if I saw something like this when bearish. And the reason why I wouldn't take this, though, is because this was before FOMC. And I will not be in any kind of a position before the release of FOMC, because that I don't want to deal with there being some sort of surprise and then the candle goes crazy. I want to see what happens, and then after the surprise, if you will, see if there's an easy opportunity. So yes, this did work out. You would not have been punished if you had done that, but I did not want to take that risk. Instead, I was fortunate that the market after FOMC, so this was when, let me see, I remember it was right there. So at the time of FOMC, we got this first sharp move down, which was a false start, and that's what I was looking for it to be. This is getting people short too early. And if I just zoom out to the 4 hour, let's say before this candle even happened, because we all know what happened by this point. We have this retracement into this up close candle, and we're bearish on the day, and we see a 4 hour swing right here. So this high is higher than the highs on the left and on the right. And so once we see that on the 4 hour chart, we can see, okay, on the 15-minute chart, that's the move down at the announcement. We'll just mark out our highs on the 15-minute chart. We have this high, we have this high, we have this high. We still have this imbalance right here. And then so it's just about waiting and seeing if we get a move above. And I don't think we could cross this high, but we do hit liquidity here. So then it just becomes about watching what happens. Are we going to keep going, or are we going to reject? And that to me is the sign of rejection right there. We go down and we see that displacement into this gap. So I'm using the 3-minute chart here, stop there, and targeting, it was just 2 hour for me, right below those lows. And I think there's probably targets to the left. I don't know. There's some stuff there, but again, 2 to 3 is generally what I would do. You know, if this low was lower and it was 3, I probably would have gone for that. But we can see what happened. Play it forward, got tagged in, and didn't have to wait too long, 20 minutes or so to hit target. And then of course it did go. So I do need to get better about just holding and trailing, probably, because there was a much bigger move here, much bigger move on AJ, much bigger move on S&P, that other trade. So definitely leaving money on the table, but we're just kind of racking these up one by one. Let's go to NASDAQ later in the week. I don't know if I have time to go through all the trades that I took this week, but I do want to remember this one. I should do these two. These are both really good wins. Okay. So this was based on the 4 hour as my bias. So I'm biased on all time frames, bearish bias on all time frames. We're seeing momentum, we're seeing trend, we're seeing each 4 hour candle. And by trend, I don't mean lower lows and lower highs per se. I mean momentum. Each candle is pushing lower than the previous candle's low. Even this up candle, this white candle, this bullish candle is making a lower low relative to the prior candle. And we're rejecting off of highs. You can see this rejection above this high. And we're not even testing some of these other highs. And so I'm expecting the next candle to be bearish. We're still at Thursday. We could be reaching towards these lows down here. And so again, this one, what was good about this trade was the fact that at first I was looking at these equal highs, waiting for those to get tagged. Also noting that we are in a 1 hour fair value up here. And the market was kind of hanging around here, and I saw these equal highs. I was like, yeah, it's got to go to equal highs. But then I always notice this after the fact, but in this case, I remembered, okay, these are very clean bodies right here, closes. Sometimes it just runs the closes. And if you look at the line chart, you can see clean highs as far as closes, as far as the bodies are right here. So because we're also trading at this 1 hour imbalance, I thought maybe it leaves those equal highs. Maybe it doesn't take them. So how would we see evidence of the fact that it's not going to head up there? Well, I'm going to drop down again to the 3 minute, which is what I like to use instead of a little bit more responsive than the 5 minute and not as many false signals as the 1 minute. But anyway, here we go. 3 minute displacement down, structure break off of this level. And so it ran the bodies of the 15-minute, very clean bodies of the 15-minute highs. And then again, I think my stop was down here, 25 points. We have equal lows. Again, equal body lows here. And then a very nice move down, which hit here, gave it a little bit of a bounce, and then continued lower, I think much lower. But I was out by around here. So there's another trade, again, 2R. So 2R is really my sweet spot when we have lows. I don't want to see it hit the low, come all the way back, then go lower. If that were to happen, I would just look for another opportunity. In this case, it just kept moving. So there actually was an opportunity I missed. Where was it? Here? Oh, man. I think it was this. Before it had hit this low. Same type of setup. We're bearish. Price comes down. We're bearish. It comes back, takes out these highs, pushes lower displacement. And so I should have had this. It was a mistrade. Again, it could have been 2.7 or so. And then it formed a low here and then didn't make it. But this is just kind of an example of what I was trying to say. It's like you think, it's going to go here, but the timing of it might not mean that it goes there now. Anyway, that's why I wanted to bring that up. So this was a mistrade to at least to there. And then it pushed back up and gave us the setup that I just mentioned. So let's go into Friday. So why do I want to talk about Friday? Yes, we're very bearish, but short term, we can still be bullish and go counter trend when we see conditions that are logical to do so. In this case, we've hit some higher time frame support. We know on a bearish week that Friday is likely to make the low, and we're supposed to see some sort of wick form on the weekly chart. And if we see evidence that that's going to happen, we can take a trade. And so for me to see that we have this swing low form, so this momentum that I described for Thursday's trade, making lower lows relative to the prior candle. We get to this candle, we make a lower low, and then right here, we actually make a higher low. So we formed a swing low, momentum is waning. We're probably going to see a retracement to some sort of premium price level. Remember the equal highs that we did not hit from Thursday. We can also see that on this 4-hour time frame, there is a gap above right here. And furthermore, not only did we create this swing low, we created another candle that went above this high. And this is all before New York session. So this is when I came to the market, and this is what I saw. The weekly profile. So I was already thinking that Friday after a big expansion, we might see a move higher. So that was already in the back of my head. But I opened the chart and saw that we made the swing low, completely violated this bearish imbalance. So we totally inverted it. And then had another close here. I thought, okay, for sure we're going higher. In fact, we also created a bullish imbalance right here. And then so it became about identifying where do we get involved. Well, let's get to 9:30 right here. And we are going to see right at the open, after we get this little, again, false start, move higher, right at the open, we have this type 2 liquidity grab. So after 9:30, market spikes down, hits these lows. And I was looking at these lows as well, because this is also, if I go to the line chart again, there's some clean lows right here. But this one I like the most because we have that 4-hour imbalance right here. And so, I could have bought here, but I didn't. I just, again, let's look down to the 3-minute chart. I'm just trying to do kind of the same things again and again. And we can see we have this push up, we create this imbalance. And then again, the target, this I felt very confident in. It was more than, so again, this is about 3R to this 4-hour imbalance to these equal highs. And what I did, of course, I closed early, did not reach that target for me, but we got that nice push up. Again, this was Friday. I saw we were tagging this high. I felt very confident that we were going to go to this high, but I didn't want to see that come to, again, we're over 2R. We're starting to pause. I didn't want to see a retracement. Not that it should have, but started to hang around here. And so I closed it at about 2R-ish again. And so just banking these trades, they I don't mind taking anything like that. That's 1.5 R even. If it's clear and obvious, it makes sense. So that was a trade there. Now I missed an opportunity again to short this because now that we've tapped in, we're still, even though we're seeing this pullback on the 4-hour, we've hit a 4-hour level. That makes sense to look for shorts because on the daily, we are still bearish. And so eventually this candle on Friday, even though we were expecting a retracement, we have to ask ourselves, is it going to call the way up here? Is it going to completely engulf Thursday's candle? Anything's possible, of course, but what are the roadblocks in the way for that to happen? And in this case, you could say that it's this 4-hour imbalance when we're bearish. It's come back to a premium level. And we've rated this high. Again, this is not a trade I took, but you can see that after working liquidity here, we get this nice push down. Again, reacts off this imbalance, bounces off this imbalance, pushes up, rejects off the wick, and then closes through this more recent bullish imbalance, closes through it here. So that could have been a short to probably this low. But again, I did not take that one, but enough was enough at this juncture. didn't want to give any money back at this stage in the game. Another loss I took this week was on the dollar yen. This one, again, was just kind of greed, probably a mistake, but I was correctly bullish after Wednesday. So after Wednesday, I thought Thursday would bounce and go higher towards, if I go to the weekly chart, I just see us moving higher on the weekly. And I was just targeting this level here. And after FOMC gave us that Wednesday close, the way I looked at it was Monday, down week. It's kind of similar to AJ, the AJ trade. Tuesday, just kind of expanding the range of Monday, really. I don't see it breaking out, but then Wednesday, we see the breakout. So I saw this breakout on Wednesday with a very nice close, and I wanted to buy basically a retest. But again, this is almost the too easy, obvious level to trade, which is why I think it went lower. And then after the fact, I noticed a broadening formation. So let me just go over the trade first. So this was Asia session. We had this nice swing point here after running this low, these lows here. This was the FOMC move, and I just left a limit order when I went to bed. I thought, okay, we're forming a clean range right here. By the time I went to bed, I thought we're likely to, I just kind of bought this imbalance here on the 1 hour to target this high. And when I woke up, I saw that I'd been basically stopped out. So there's no confirmation on that, which I'm fine with sometimes, but I think if I had looked, and even at this point in time, so before the entry, so this is clearly a broadening formation, but which is common on FOMC days. And so structure breaks are less reliable for me when on those, in this type of scenario. And so it can, again, just continue broadening the range before continuing higher. And ultimately what's happening, it's still bullish, but it's really just a higher time frame price run. So we have this weekly chart. And if I go to basically a 2-day chart, you can see see this imbalance here. This is where I got stopped out on this wick. This is a 2-day chart. And this is what I didn't see at the time. But that's why I do this analysis, is you can see this imbalance right here. So it's just coming in and it's tapping into this imbalance on the 2-day chart. And if we could use like an 8 hour, so sometimes it's using these irregular time frames, which you're not going to always, or I'm not going to always look at the right time frame all the time. But when it's broadening like that, then it's good to kind of see what's going on these other time frames. But we get the liquidity run on the 8 hour. So this could have been a re-entry. I think it's clear on the hourly. Yeah, this one wasn't, I don't think I really would have had a valid entry for me per se. It would have been a little bit riskier, but the premise being it ran the low, hit this imbalance. It's all like all the other trades. Runs a low into an imbalance, violates the bearish imbalance, pushes up, creates a bullish imbalance. So actually this would have been fine. Creates a bullish imbalance right here. Let's make it white. And then presses higher. Does it make a new high? I don't know if it does. So it looks like it's moving that way. Again, it's one of the cases where the bias was right, execution was off. And that was the second loss I took on the week. So all in all, a good week and just sort of a good example in price action study. So that's going to be it for me tonight. This is a long video. Hope it was enjoyable for someone to watch. Otherwise, it's just good for my records to have. So that's it. See you next time.